Bitcoin held up remarkably well yesterday after the tariff introduction. Purple line is S&P 500, bars are Bitcoin. But it didn't rally either. Larsson line is blue since a month, so what did you expect? Jokes aside, for the longest time, Bitcoin has mostly just followed stocks. The massive S&P 500 drop yesterday made US stocks break this key support. Not a good look for the stonk market. If following the same patterns, the same correlation yesterday, Bitcoin would have dumped below 70k and completed a head and shoulders pattern with neckline at about 81,000. But it didn't. The head and shoulder pattern remains uncompleted, and in fact we see signs of a bounce today. So why didn't it dump hard? I can imagine two reasons. Number one, a huge Saylor buy not announced yet. That's pure speculation for clarity. But maybe even Saylor begins sweating a bit, and he tried to protect this support. Because if Bitcoin stuck to this correlation, that would have been lower lows in this construction, and he would have started looking a lot like a top buyer here, which could perhaps harm confidence and ability for a new raise. Even just a little lower yesterday, down below 81k, we get this completed head and shoulder pattern, which a lot of people would monitor, and that would have a target of about 74,000. Reason number two. If Saylor didn't buy, which I don't know. The other option would have to be that Bitcoin investors see this development differently. What could be the reason for that? Let's explore two scenarios from here. One is that the tariff announcement is just a negotiation tactic. Love or hate Trump, he has a lot of business people around, and he literally wrote the art of the deal. He loves negotiation, and I kind of recognize this because this is exactly the negotiation game from when I worked in business and we did big deals. Customer says, I'm gonna throw you out and replace your entire network with your competitor. Supplier is quietly thinking, they'll never do it. And then supplier says, sorry, this is really the best price possible because of this and that. I cannot lower it even 1% more. You got me by the throat. We can barely pay salaries and costs at this point. A lot of people, I think most people, thought that Trump would never actually do it. Then the customer actually awards the $1 billion contract to the competitor to replace you. This was the step on Wednesday. Like, oh my god, he actually did it. Then all hell breaks loose at the supplier. Cam calls the region head calls the CEO, everyone panics. Oh my god, we actually lost the contract. Price is lowered 50%, pleading to the customer, please take our money. Customer says, okay then, I'll take you back. Cancels the contract with the competitor. Today is the step. I guarantee that all hell has broken loose around the world. Company CEOs are calling the trade minister and the finance minister. Ministers are calling the prime minister or the president. And they're having emergency meetings in PM and president offices around the world. Perhaps they will come begging for an improved deal with the US. Perhaps the US will cut the tariff by 50%. Or remove it completely. The actual formula was half of trade deficit divided by total imports, with a floor of 10%. So if we take one example, US goods export to Malaysia was 27 billion, US goods import from Malaysia was 52 billion. 52.5 minus 27.7 gives a trade deficit of 24.8 billion. Divided by total import, 52.5 gives 47%, half of that gives rounded 24%. Malaysia, US discounted reciprocal tariff 24%. So the tariff is proportional to the trade imbalance of goods. It's not a reciprocal tariff, just to clarify that. So if the US imports a lot from a country and doesn't export much goods there, then that's a high tariff. Like when I worked with telecom networks in Vietnam. Samsung handset division set up factories there for mobile phones. In total, they hired almost 200,000 people. US people will buy a lot of those phones. Nike manufactures shoes in Vietnam. US people buy those shoes. more than Vietnamese people buy shoes produced in US. So as a result, countries like Vietnam get high tariffs, and other manufacturing countries too, like Myanmar, Thailand, China, Pakistan and so on, because these ones don't buy so much back. Of course, the obvious objection here is that it ignores the services trade. This is just for goods. And on services, US often has a surplus, like if a Vietnamese person is buying a ChatGPT subscription or some cloud storage subscription from AWS or Google. A second scenario being this. Say that it's not a negotiation and that big tariffs will stay. Then no doubt tariffs on imports will hit American company profits too. At least the stock market thinks so. Clearly, because for example costs of importing raw materials and components will go up, and this could slow down the economy so much, kick down yields so much that the Fed cuts rates and starts QE. Just look at how the rates have dropped. Furthermore, this tariff principle means less import, because the more the import surplus, the higher the tariff. So less imports means obviously that American companies and American consumers will spend more in the US. They'll buy more American-made products even though prices are higher than before when they could buy the same product produced in Vietnam. And I want to really drive this point home because it's very important. I will keep using Vietnam as an example, but it's just an example. It applies in general. In Vietnam, according to my friend ChatGPT, manufacturing workers have a monthly salary of about $300. Of course, with some variation depending on region and if it's garment or electronics manufacturing, for example. And that's not for the lazy 40-hour work week that we have in the West. In Vietnam, they're gonna work 6 days a week and they're gonna work 48 to 60 hours plus overtime. Now, good luck finding the worker in Texas who will work 6 days a week, 48 to 60 hours a week for $200 to $300 a month. So prices on Nikes and everything else will go up in the US. That means inflation kicks in. Combined with the tariffs locking the spending in the US, fresh dollars will drive prices up in the US. And this is at the same time as the Fed also needs to cut rate and do QE to avoid a slowdown in the economy, further pushing inflation. Together, this could lead to a lot of inflation and people might flee into stable assets, which could be gold, Bitcoin. Then what if at that point they relax the tariffs? Almost sure that there is at least an element of negotiation in this. This sequence of events would be like a multi-stage rocket. My conclusion from all this is as follows. Love or hate Trump, I think one thing that everyone can agree on is that he has a big ego. He's not gonna end the 4 years with this chart. That means that if we look over the next 4 years, one way or another, stocks will bottom out, and I think we will have a massive bull run in the US stock market. And that is independently if this tariff announcement is a negotiation tactic or a high-stake game theory gamble against the Fed and the market economics. And because Bitcoin seems to trade like a risk-on tech stock in this new institutional area of Bitcoin, that means that we would also have a massive bull run in Bitcoin too. And because the altcoins largely follow Bitcoin, that's when altcoins will run too, with bigger swings. 10x up, 90% down, as usual. Now my goal is to identify a bottom formation, find renewed strength, which could be very soon or later, but I'm positive that it will happen. And when it happens, I'm gonna buy like crazy, guys. I'm sticking to my guns. Right now, Larsson line is still blue for Bitcoin. I'm on the lookout for bottom patterns. I have laser eyes on the 90,800 range low if that gets reclaimed. And of course Larsson line flipping gold. That hasn't happened yet. If these levels and this inverse head and shoulder doesn't hold, the next logical support, if we zoom out, is this level at 73k. Nothing of this has changed. Remember this circle that I draw even before we had this breakdown. Guys, we're not going to go to 150,000, 200,000, 300,000, 1 million, whatever number, with the trend down, with Larsson line blue. Not gonna happen, so no need to be stressed. I will stay reactive. It has worked so well for me in this downturn and over all the years. Not gonna change it. And I'm gonna mention one altcoin today. I'm sure you'll all fondly remember this 0.002 support in the SOL to BTC chart. Because I talked about it for a full year, until you guys were so fed up with me. From January 2024 until December 2024. Then it finally, irreversibly, broke down and completed this head and shoulders top pattern. There were a lot of people saying that it can't go lower and that the unlock narrative doesn't matter and so on. But as I said here several times, I wasn't so sure about that. Clearly someone was selling or price wouldn't do this. So everyone who was irritated about my constant repetition of the 0.002 support when it was obviously going higher, hope you appreciate it more now. And I hope that it made you a bit more defensive in position size or otherwise. Then we could argue about the exact pattern breakdown target. Are we measuring it in log or in linear? And are we measuring the range height or the head and shoulder neckline breakdown from this level? Regardless, that pattern target has now been reached. We did hit this support here at 0.0014. Members, you'll remember this from the TA reports. On the SOL to USD chart, Larsson line is blue since mid-February, up here at 170, 180 something. The support that needs to be reclaimed is this at about 127. A prediction is that people will start writing double bottom posts today, but that's speculation only. A double bottom pattern confirms if the high between the two bottoms is crossed, which would be at 146, 147 something. Nothing has changed in the SOL versus ETH structure. I think the easier play here than trying to figure out the USD chart of some altcoin is to instead figure out when Bitcoin turns around, and then the leading alts will probably rally too in USD terms, based on how things have usually played out in the past, and rather use the alt to BTC chart to figure out the inherent strength of the altcoin project as such. Here is, for example, the Ethereum to BTC chart, the SOL to BTC chart we already looked at, and here is the BNB to BTC chart for comparison. Everyone is down something this period, but if you lost too much money this stretch, hodling altcoins and keep running back into the fire to catch the falling knives. When Larsson line has been blue for literally every single altcoin in existence, then at least consider joining us and put on your hodl sucks socks. I'll post the proper Friday tier report to members later today. Two more things. I think there will come opportunities in quality tech companies here, because they're getting pulled down with the market as well. Commodities, guys. This was the video 2 days ago. Typical performance here, this video performance here. Subscribers -3. It's exactly the same as a couple of years ago. No one is interested, then we smashed it and everyone gets interested too late at the top. I don't know how it can be any clearer. Guys, gold and commodities has been the diversification in this market. We call the generational breakout perfectly. Pay attention to commodities now instead of when it's too late. Don't get scammed, guys. Lot of impersonators. I have only one website. It's ctolarsson.com. Press here for course and indicator. Press here for Larsson Line Pro. Someone contacts you about an exciting investment opportunity. It's not me, it's a scammer. Don't send them money. Thank you, Tack. CTO Larsson out.